Hello, everyone. Um, this is my experience with the stock market. So, about a year and a half ago, I started trading stocks and penny stocks. That's what really intrigued me. So, I put some money in some stocks. I was losing money, and I realized something. Canada might actually legalize cannabis or marijuana. So I thought, I'm going to take losses. So I took losses on a couple medical companies, penny stocks, American companies that I had holdings in, and I moved that money to Canadian pot stocks. And I'm Canadian, and I seen the potential in these stocks. And for example, um, I know this is just a video. If you want proof, I'll show you proof. I don't care. But Aurora, I bought at $1.05, and I held it. I held it and I sold. And I sold at $7.90. And I also picked up on margin, which I have mixed feelings about. I'm glad I haven't traded margin recently, but I bought a company by the name of Namaste Technologies. And Namaste Technologies I picked up at 20 cents in November, and I brought my average up because I bought more, and my average was 40 cents. And I sold this company at $3.83. I got rid of all my shares. And if I could go back and if I could advise other people, I would say don't sell your shares. And I'm happy that I sold my shares because Namaste now is at like $1.70. But I really, really, really messed up. And I messed up because I wanted to start trading. I didn't want to just buy stocks and hold long. I wanted to get that active, excuse me, that active income from stocks. So I decided, trying to be a hero, I took a huge chunk of the money that I made from Namaste and Aurora, and I put it into Namaste for a trade. Um, I put it at $4.25. I had a sell order at $4.30. I was at work because I don't trade full time. I would love to trade full time, but there's many reasons why I don't. Um, it's good. It really is good to have that fallback income where, um, like my girlfriend is not depending on me so much from just that. So it's good to have several streams of income if you can, and that's beside the point. I'll talk about working in stocks, the two things, working full time and trading stocks, in a different video. But this one is the biggest lesson I learned from trading stocks is to, if you're going to trade, to set a stop loss. Because what happened was I entered this trade at 425. I was going to be out at 430, make my $1,000 or whatever it was, and be out. Off a nickel in price movement, I would be up a grand. But things went south. I was at work. I was trying to focus on work. I was trying to focus on my trading at the same time, which I hope my work doesn't see this, because if they do see this, it would be like, fired. No, I'm just joking, but biggest lesson I learned is set stop losses if you're putting up larger money. And this is like I was playing around with money that I've never seen in my life before. And the reason I seen this money is because of stocks, penny stocks to be specific. And it's going south now with the market. The Dow was down like 600, just not 600 points, 666 points. The last time that happened was around 08, 09. Market corrections generally happen every 8, 9 years. I'm scared because I'm down large. I'm down um, an amount where I can put a down payment on a house, but instead I'm renting a condo, a nice condo. I'm happy here. It's good. But I look at the stock market different than a lot of people. A lot of people look at the housing market different than I do. I believe that there is a lot of room to grow more wealth if you rent and have your utilities included for a good price, because that leaves you with more disposable income that you don't have to worry about with a bunch of different headaches from owning a house. But again, that could be another video. But right now, I'm just talking about the stock market and what I advise everyone to do. What I advise everyone to do, oh, my hair's too long, is if you're up 700%, sell and try to manage the risk where you put that money after, which I failed to do, and I take responsibility for that. I did not manage the risk properly, and I knew the proper way to manage the risk too. I have training in finance, so I mean, I hold a degree from a top 100 university in the world in finance, so it's not like I'm new to it. But I am, of course, relatively new when it comes to investing and trading stocks. I've only been doing it for now about 2 years. I've been really successful in university stock trading competitions. I finished with the top return in Alberta, um, and that was just for students, and that's something that I pride myself in. But however, saying that, when you're talking about real money, it's a lot different. It's a lot different with the decisions that you make, what you're going to do with that money, how you're going to split that money up. Um, I'm not a huge believer in large diversification if you have under $100,000. So if you have under $100,000, like myself, um, I will not sit there and say, yeah, you should put, you know, $1,000 into the tech sector, and then you should put maybe a few $1,000s into the cryptos, and then another few $1,000s into the pot stocks, and then another few thousand into oil. I'm not like that. I believe that you should focus on one sector, and you should pick the companies that interest you and study those companies like crazy until you can tell people how successful the CEO has been in the past, the revenue growth every quarter, every year. Is the company turning a profit? Do you think that they're going to pay dividends eventually? What are the outstanding shares? Are they diluted? There's so many factors when looking at stocks, and it's just such a huge financial, like the financial markets are so massive that you can't just focus on like like the things. What I'm trying to say is you can't focus just on things that don't matter. You have to look at other forces too. So the Dow dropped 666 points on February 2nd. Today is February 3rd. That's a little bit frightening for me because I'm losing. I shouldn't say losing because I haven't sold and I won't sell. Uh, I'll only sell if I was joking about with my girlfriend about this, but I will only sell if I can't put a jug of milk on the table, or if I can't have cereal in my bowl. So what I mean by that is I'm not selling. I will go down with the companies to a penny if I have to, because the market is fabricated and constructed to take the little guys' shares. Um, the big boys want you to sell. They want to put fear in you. And they want you to think that it's going to be like a 1930s crash where the Dow dropped about 10 or 12%. Um, when it comes down to it, though, if you look at historically, which is no prediction of future returns, but if you look at historically, the market has been decreasing the correction. So what I mean by that is, um, in the 30s, it was like I said, 10 to 12%. Now, when markets correct about around anywhere from 2 to 5, like that's a correction, and the Dow was down 2%. Um, it's it's around 1 in 5 downturns in the market actually turn out to be like a landslide down. So um, the biggest mistake that I've learned from the stock market that I made that I won't make again is I would follow Warren Buffett's advice of staying liquid. Um, I got greedy. That's what it comes down to. I was um, past a while making good money, like really good money, where uh, when everything was all good, I really didn't have to work, but I still held my job. I still wanted that secondary income that paid rent and like paid the expenses. And now I know why. Because I'm taking a shit kicking on my stocks. I'm losing like uh, I'll just say the number. I'm losing over 20,000 in my stocks right now. So if I sold, um, I'd essentially lose a huge chunk of my profit from those original picks that I made. And this is where maybe my emotions are getting the best of me too, which I advise if you're going to trade, you need to separate 100% your emotions from companies, uh, which is really hard. It's really hard for any average human to do. So I just made this video just to let you guys know, like, the mistakes that I've made, like from my limited experience in the market, and how like you can prevent that. So the number one thing is stay liquid. So like try and hold at least 33% of your equity in cash. So when there's downturns like this, you can just start scooping shares. So you can buy people's fear. That's what the market comes down to, is buying people's fear and selling people's greed. And that's why that I got out of Namaste and I got out of Aurora at the levels that I did. And now that I look back at it, I should have just stayed out because I sold and I sold at a good time because although the stock almost doubled, Aurora almost doubled from the levels that I sold, and Namaste went up another, you know, 70 cents or so, which is not much from its high. I had the right sell. I knew when to sell. Sell people's greed. Charts don't lie. Look at indicators. Look at moving averages. Look at how these stocks are outside of the Bollinger Bands. Look at the RSI. Is it oversold? Is it overbought? These are all factors to consider. And um, I'm just looking at the time of this video, and I'm going to wrap this up because it's a little bit longer than I thought. I don't think anyone's actually going to listen to me speak about this fully, but just a couple things to keep in mind if you do plan to trade, if you plan to buy cryptos, or if you plan to buy pot stocks. My advice: just don't get greedy.